Good afternoon. I hope it was at this. So, I think just to start off, today we're going to that person. So, if you're looking for strategy, then this is going to look at strategy, how you can NFP calls basically just change sets. So, anytime at the beginning of every month, Friday month, a major news that is released by news reveals the number of have been in that previous and those that have been displaced within. So it just helps us to make the decision where we expect the dollar to be going. If the news is posted that is many people employed within that, that is, if the news is better than the previous one, then chances are that the price, the dollar is going to gain value. If there are few, the employment is opposite, that is, there are few people are employed compared to the previous one, then the dollar is going to be less expensive. So the dollar is going to lose some value. Now, in this webinar, we're not going to focus so much on the mental side of everything. We're not going to focus so much on exactly the ins and news or how specifically the news affects everything. We just want to look at find a simple strategy that we can tell when it comes to trading the NFP itself. So it is always released on Friday of every month, Friday of every beginning of like the first week on Friday of every month. It is released at 0 Moscow time. So I want us to show you where you can get the news from. 1 second, show you the website. So I hope you can see my screen still. If you want to get the news itself, just go to freshforex.com here, and then you go to analytics. Then here, where you have analytics, then you go to forex education. You click it, and you click it. This is so far. These are the news we're expecting. This is for 5th of October. 5th of October is tomorrow. So we are looking at the main news, the major news. That the only ones that we are trading. We are not going to trade medium impact news like this one. Anytime you see this yellow, it means that the news is medium impact. Then this one is low impact. These are low impact. We have medium impact. Then we have a high impact news. So this is very important. We also have this one. This is a high impact news. So this is of interest. Anytime, as I've said, anytime we have a red news, it means that it is of high impact. Friday is actually on 6th, so we have to move to the news that we'll see on 6th here. I believe this is date 6 because I've seen NFP there. So we have, this is 6th of October. The first news which is of high impact is the UN EU Leader Summit. This is the first news which we have for that day, but we're not going to focus on it. The next high impact news is RBI, interest. This is another high impact news. Then another one is the employment change. This is the one we are focusing on. This is for Canada. This is not for United States. So we're not going to focus on that. We are going to focus on this. So you can see basically that there are two major news that is being given at that time. There is employment change of the Canadian economy. Then there is unemployment rate of the Canadian economy. Then we have the same unemployment rate on the US economy. We have the same thing on the US economy. So this is the news that we are focusing on. This is the one that we want to look at a simple strategy, how you can trade it successfully so that you don't find yourself trading on that day. If you don't understand what's happening, I do recommend that you do not do anything. Just keep holding, do not trade anything. Let the market flow as it is, but don't trade. Just avoid trading for that day and then come back on Monday. So I want us to look at our charts. I've developed a simple indicator which we can use for this one. I will put it on the descriptions below so that you're able to download it. I'll share my other screen. This is the screen I'm referring to. Check my chart. Yes. So what I have done here is just before the news, 30 minutes, like the 30-minute opening candle to the when the news is placed, that is at 15:30. We pick the highest high for the news of that day. So this is the opening of the day, 30 minutes candle just before the 30 minutes candle to news. Pick the high, pick the low. So when the price is here, this is what when we do all this. And what we do is this: whenever we enter a position, if we enter a position here like a buy, like we don't enter buy here, we enter a buy expecting that if the price ascends above that range, that will be an indication that the price is going to continue in that direction. So we're not selling anything or buy anything immediately the news is released. Instead, we have a pending buy stop, pending sell stop. So if this is triggered, we temporarily will add a position here. Say that when the price goes up some level here, it the take profit. But if the price would move in the opposite direction and this sell is triggered, the position we enter here, it is entered in a that when the price has hit the take profit of this trade here, actually covered everything which we lost on trade here. So that is the good news of this that we are looking at now. But this was on 7th of July. We check 7th of was Friday. Then the next one, 4th of August, Friday. So if we were just following what I'm saying now, it means that here we could have had successful position, successful buy trade. Then after the 4th, at the end of the month, which is also this one, here also we could have had a successful trade because we could have had a pending buy stop, pending sell stop. You can see that the price actually went and that profit is a good one, which means here we had a good trade. No compromising that one. Then the next month, which is now 1st of September, actually opening of the previous month, Friday. So here we could have entered a buy stop here. Our take profit is somewhere here. Our stop loss fixed at the take profit of this other candle of take profit of this sell stop. So take great caution to be very, very careful what I'm telling you, because you need to have money for you to earn it. If you have been trading for some times now, I know you already are aware that you can't make a substantial amount of money if you don't have anything useful in account. So if you have $10 in your account, don't expect it to increase all of a sudden 100 or 200. You have $10,000 in your account, chances are you're going to make more money. That 10,000, have $50 or 10. So as much as this strategy looks cute and very good, and just ensure whenever enter a position, have enough balance account. So I'll enter buy stop 0.01. It hits take profit, well and good. If the other one hits take profit while we're within, if the other one is while we're within the same day, we'll also add a position. So we'll enter a sell position and see that has gone successfully. So we had a buy successfully, we had a sell it successfully. And the best way to put it is the take profit same distance as the size of this level and this level divided by 2. So we have the size, we have the size. You add this is the same as distance. So the lot size of the trades which is the second time should be in a way that if the one is losing, the next one will cover everything. So we have that. We'll check another one. You can see on this month, if you are just looking at these two trades, actually could have had very successful trade at the beginning of that very month. So here also you can see that on this month, this is end of June. 2nd of June, you can check here Friday. So we had a break below. This was actually hit our target. Didn't end twice. So that month, if you are just doing one trade in a month, very good. And something else, you have to learn to be patient. You really, because without it, there is literally nothing you'll do here. If you find that there is something that works just once in a month, it's very, very good, really respected trade when that thing shows up. So we'll only be entering positions when one thing happens and when we are trading just one news. That way, you can trade for 6-10 years without seeing any major changes or any major losses. Like here, I've entered a position and we could not have lost anything. Here also could have entered the position which was successful. So this was just one trade, and I believe it went more than half the size of this. Very successful. Here also we had a trade. Here also. So now look, if here, you'll know why I say that very good to have enough balance in account. Look at what would have happened if you had a buy stop and a sell stop. Chances are high that this buy could not be triggered because of spreads when the news is released. So just some minutes after the news is released, like 30 minutes, the spreads are super high. So you may not be able to catch it instantly here, but you will still catch it if price extends upward. So there are high chances this was not triggered. There are also high chances this was not triggered, but there's extremely high chance this was triggered. So whenever we have a case like this, and just assume that we manage to pick it, that the market opens, you'll enter 0.01, have your take profit here, then have your stop loss here. The distance between the stop loss and the entry point is actually half the distance we have of the range that we had before the news is released for the day. Highest high for that day before NFP is released, the lowest low for that day before the news is released. So that's somewhere here. So we'll have this. You can see that if this was triggered as buy, then you had a sell here, which the loss size maybe is 0.05. If this one does not go the correct direction, this could have gone, which means that if you didn't have enough balance, most likely, because this is winning, this is losing, this also is losing, this has lost, you've entered the sell, it's also losing. If you had less balance, topped out somewhere in between. But when you enter position here, that is now good. The price actually goes our way. Maximize your profits by gaining everything which you have lost from this point to this point. Else, not find yourself do not find yourself uh, just putting lot sizes any randomly. Remember, this is mathematically proven that if you had a position here 0.01 and it goes down, you will lose money. It is true. That means that the next position you enter here, its lot size must take into account the distance of the first trade from this point to this point here, how much it will lose in total. Such that when you enter position here, that position will go, if it goes up to take profit, actually gain everything which you shall have lost as a result of this trade here. So you enter the position, goes down, enter sell, it goes up. Remember, we were trying to recover this sell, this buy. So if the price comes up to this point, you add a position in a way that you take into account the sell you entered here and the take profit. Such that if this goes up to that take profit, you actually are in money, but everything we lost as a result of this sell here. So that is one thing which you have to take into account. You have to take that seriously into account. Whenever you are entering a hedge trade, it must be a way that gain you've just lost in the trade. Is that clear? Do you understand what I'm saying? So you don't just enter trades randomly. You don't just find yourself triggering a buy, triggering a sell, just because the price is moving up and down. No, the lot size of that trade must be in a way that it does hit the take profit. If it does hit the take profit, you'll gain everything which you could have lost as a result of the losing trade. So, like here, this was a successful month. This was a successful month also, because you see that the price indeed went up. So we check another one. This was also a successful month because the price actually went down. And this one also, month, the price went up after the breakout. I hope now you understand what I'm saying. You can see the same thing. This one went down, so this was a successful month. This one, this could be a tricky one because the price actually gapped below. So after this gap here, you have had a position here. Then you could have been tempted to enter immediately when the market opens. So still, this one could have been in profit because the distance between this point and the lowest low we had is equivalent to half of what we had distance between this and this point. So this is successful, but we had one trade losing. This was a successful day. Check here, this was also a successful day. So sell, you can see here, successful day. This is a very tricky one because it was not triggered immediately. Instead, the price took some days before eventually breaking below, but it was successful. So you can say it was successful. You can see that it actually went down, breakout. It didn't break above, but it broke below some. So from the examples which I've just looked at as we're talking right now, you can see clearly that it is possible for one to make money in the forex market, especially if they're trading just one thing. So if you're looking at just one thing and trading it strictly that thing, like here, you're only trading NFP, 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 then you will find yourself at a point where you get you get trades that are very successful, very few trades, very successful one. Very few trades, but very successful trades. So that is the most important thing which I wanted us to learn today, and it happens once and only during NFP. That's when it happens. So if you're not trading anything, you're not doing guesswork, we are waiting for one thing to happen, then we trade when that happens. That one thing happens during NFP. So here, this could have been a good one because it entered a sell, it didn't take profit, but probably somewhere here hit the profit, or somewhere here the profit was taken. Have the same thing. This was triggered. This one here, there's a spike up. Okay, look, if you entered a buy here, even though the distance between where you've entered and the high is higher than the half of the distance between this and this, chances are that you could not, because during news the spreads are very high. So there are chances you could not have been taken out here. But you could have entered a sell here. This still could have lost because it didn't hit the take profit. The distance between this and the lowest low is not equivalent to what we have as the distance between the high and the low. So this could have been a running loss. Could have added a buy, hoping that this buy is going to go up to take profit. Then could have entered a sell. This sell here, this is what could have actually worked out. So you can see for the entire year, this has happened just once. This has happened just once, where we've had a string of 1, 2, 3 trades that are not successful. But still, we took the profits when it hit here. That makes sense. So you can see basically that if you're following one thing, you can trade several without seeing any major losses. You can trade several years without seeing any major losses. So if you do that, just ensure you have patience, wait for price to do exactly as I've said, and you trigger it. So thank you very much. That should bring us to the end. There's another. We're going to meet again tomorrow at the. So we are going to meet again next week. Thank you.